Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
Lionshare Bookkeeping believes the key to generating wealth is understanding where it comes from and where it needs to go. They provide bookkeeping and financial coaching exclusively to real estate investors, focusing on cash flow, strategy, and action. Go to lionsharebookkeeping.com/apartments to connect with them now. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Tracy Hubbard. Thanks for being on the show, Tracy.
Thank you for having me. I appreciate it.
And Tracy is a real estate investor and syndicator, professional ForEx trader, and serial entrepreneur, having owned and operated 6 companies across various industries. Because of Tracy's extensive experience in the global interest rate and currency markets, he brings a unique advantage in his understanding of how global interest rates can affect cap rates and financing rates, giving him the edge to position his investors for the coming years. So great topic, Tracy. It's a pleasure to meet you and have you on the show. Tracy's daughter, Keely Hubbard, was on the show number WS693, and we talked about turning strangers into repeat investors. It was a great show. I would encourage you to go back and listen to that show as well. But Tracy, welcome to the show. I want to jump into your background a little bit and help us understand a little bit better who you are. And this topic is great and is so ideal for our listeners and people in this industry. But I feel like it's something we don't typically know a whole lot about.
I understand that. And it was foreign to me when I first started doing it. I started trading the markets back in late 90s, 98, 99, and started off trading commodities. And then from there moved over to currencies in 2002. It was I went through 911 as a trader of the market, so that was a shaky event for me, and then moved over to something I thought was more liquid, and that was the foreign currency market, which back then was pretty much the wild, wild west with not a whole lot of laws and rules to it. But I eventually got good enough at trading that people would come to me and want me to manage their money. So I sort of, went over into managing money aspect of it, and been doing that for the last 15 years. And as I watched the markets, unfold in 2008, when we had our market bubble and crash, I still traded. But then that was the point probably where the Fed got the most involved in all the financial markets. And it just never really was quite the same after that. And as I saw more and more things in the financial markets look a little bit like a massive bubble ready to pop, but nobody knows when. It was harder and harder to get returns on for my investors' money, because you got to understand, when you're trading currencies, it's basically the interest rates of their governing body, whatever country that is. You almost sort of think of it like their currency, whether it's the euro, the pound, the yen. That is like the stock for that country. So it's sort of a representation of that. Now, in 2008 and 9, after the Fed got involved, everybody started rushing to the bottom of the interest rate. It's hard to make money in the currencies if you don't have some sort of spread between the different banks, central banks. Well, everybody's been rushing to zero, and Japan's been there for a couple of decades or more, and the U.S. has followed, as has the euro. So as the market became less predictable for me, I said I need to start moving into hard assets, and that really started happening in 2015. So I shut down the hedge funds and started moving my own personal wealth into the real estate, hard assets, and specifically into multifamily is what I moved into. So
nice. So I would love to dive in, or for you to dive in a little bit on just how global interest rates, affect the cap rates and financing rates and things like that. It just helped, the listener and myself to have a better understanding of even things, we should be looking at to know what to expect or what you look for.
Right. So as the central bank interest rates go down, and usually the financing rates for us as investors starts moving down with it, that creates demand, because if you can buy real estate and finance it very, very cheaply, as we can do right now when we have the interest rates where they're at, that creates demand in the market. So as more people come into the market looking for returns, it creates more demand than usually there is supply of the real estate. So then you start having these, I don't want to call them bidding wars, but these people go in here and start, offering a lot more because they want to get the deal. Well, that's driving the cap rates down, which of course drives the property price up. And so that's been what we've been going through for quite a few years now. And it makes it harder to get deals that you can get good returns for your investors. So you have to be a little bit, more prudent in your underwriting, so you don't buy something that's you don't overpay for it, essentially. So that's what's sort of driven the cap rates down here to the levels we're at. Depending on where you're at, if it's a major market, then you're going to be looking at cap rates down in the 4s easily in Texas, where I'm at, and then California. It's way down there. And a lot of California investors are running to Texas to invest because what? Because 4% cap looks great to them when they're used to 1.5 to 2. So what does that do? Well, you get people driving up the price of the apartments.
Nice. You mentioned, I appreciate that explanation, and really just laying it out there kind of simply, because rates go down, causes more demand than supply, then there's bidding wars, drives cap rates down, then prices go up. I mean, ultimately, and so you talked about having to be more prudent in your underwriting. What does that mean to you? I mean, you're an operator as well. So knowing what you know about all this and having to look at your underwriting potentially different than maybe you did 5 years ago, what does that look like?
Well, I put more contingencies in there, and on our underwriting, we also look at the refinancing part of the syndication. After we've held the property for a few years, well, we got to either refinance it or sell it. And so we put in a little bit of a buffer in there. We don't put really low cap rates in there on the refi and say in 2 or 3 years. We always bump that up a little bit because nobody really knows where the market's going. If they say they know where the market's going, they're delusional, because nobody does. And you can't predict where it's going to go. But it is the old thing of, a broken clock is right at least twice a day. So, people will keep screaming long enough, we're going to have a crash, we're going to have whatever. Well, yeah, eventually they'll be right, but they'll usually call it wrong several times before they actually hit it by mistake. But when underwriting, we usually pop the cap rates up because you don't know. I mean, sure, they could go up. You don't want to paint a picture of, okay, yeah, they're going to keep going down. We're buying at a 4 or 5 cap, and it's going to be in 2 cap in 3 years. Well, yeah, then the underwriting will look good to the investor, but we all know it's just a spreadsheet and it's prediction. So we try to be a little bit more conservative from this perspective of cap rates going out on the refi. We put in a little bit more contingency money in there, just to be careful on the underwriting, because you can make a spreadsheet say whatever it wants to be, but you've got to be able to perform still. Oh, and something else I do. Go ahead.
You go right ahead.
I was going to say something else we're doing is we're looking at tertiary markets, usually because those follow, the bigger markets, like the Dallas-Fort Worth area, Houston, Atlanta. There's lots of big markets out there, but there's also smaller markets around them, like in Texas specifically. I look in the tertiary markets outside of the big metropolitan areas because those cap rates are going to lag behind the major markets a little bit. And because of that, you can actually get a better return for your investor if you're looking at those tertiary markets. A lot of people don't want to do it, though. And you've got to find the investors that are also comfortable with investing in those markets.
Love that. Great advice. And so, where do you get your information, or, what are you reading on a daily basis or watching that's helping you to think about, interest rates right now or what to expect in the future?
Right. Well, I do follow, the financial markets on TV because I've done it so long. It's hard for me to, get out of it. So, because, it's second nature to me. So I always check the financial markets in the morning. I track a few, of my investments still in the market, but it's long-term stuff. It's investing. It's not, quote, trading the markets. So I always watch the markets there, and you will have people come on financial, and I'm not going to mention any financial networks specifically, but they, because some of them are just, downright crazy. But I always watch those news to see what's coming out there, because even though real estate is pretty much regional, you need to pay attention to what's going on in the bigger markets. And I'm talking about California, New York, those kind of things to see where the big picture is. And that also is going to give you a hint as far as what's going to be happening, down the road, because it all rolls downhill. I mean, you'll read stuff about New York, how the market is, the apartment rental is crashing up there and blah, blah, blah. Well, that is a regional thing. It doesn't mean it's happening here in Texas or Georgia or anywhere, or Florida for that matter. So you've got to keep a different perspective of it. But it's good to know what the bigger players are doing out there, because most of the big players in the apartment realm, they're invested in multiple different markets, because they also know that, if one market's not doing well, then the other one could be doing pretty good.
Nice. So, you're understanding, just interest rates, you're thinking through that. And I tell you what about, how do you know what interest rates are? And even just something simple, I know you don't want to give out, exact thing that you're watching or news media, but how do you know some of that information just so you can watch it on a daily basis?
Well, the Fed rate is one thing, and watch the Fed meetings when they come out. FOMC, they have, financial markets have, these usually weekly reports that go out there, everything from, unemployment numbers to the Fed meeting when they have that, and then the Fed minutes, they'll come out. So I read all that stuff. You can get it from all different types of sources. Just Google it. I mean, you can find, multiple sources for that, watching the interest rates from the Fed. But then again, the Fed interest rate is not really what we're borrowing against. It's going to have to be, the mortgage broker that you use. And so stay in contact with them, because they'll see what the market's doing here locally versus regionally if they're financing different properties all over the country. So keep in contact with them, and they'll give you a better idea as far as what you can really borrow it at. Now, it is going to reflect pretty much what the Fed's doing, because if the Fed's raising rates, guess what? The mortgage brokers are not going to be able to keep the rates down there also. It's just always follows the Fed eventually. So that's sort of the leading indicator, I'd say, the FOMC.
Do you, or does, cap rates compressing, does that worry you?
No, it doesn't, because I already own some properties. So guess what? They're going up in value because of that. So it's a natural thing to do. And the only thing I'd say concern me, it's one of these things, well, you may need to wait. And like I say, it is regional. Wait before you buy something. Now, as the markets have starting to compress, what I'm seeing, the interest rates compress, I'm seeing some, a lot of syndications out there are not being quite as, aggressive on their returns for the investors, because pretty much used to, would be the 10% cash on cash, 100% return in 5 years, blah, blah, blah. That's the, basic model that everybody tries to hit. Well, guess what? If the cap rates keeps going down, it's going to be harder and harder to get that. I'm seeing stuff now where people used to do a lot of 8% pref and, the 70-30 split and the 10% cash on cash and 100% return. Right now they're offering maybe a 7% pref, and maybe it's a 6-year total return. I'm just doing one right now that we're looking at a 6-year the total return, and it's mainly to help get the total return up to that over 100% for them. And it's very hard to do that at 5 years now. Now, keep in mind, you can make the spreadsheet say whatever it wants to, but you've got to perform once you go out there and, raise your running. And now you've got to do something about it. So you better underwrite it realistically when you get there. So I'm starting to see that pull back a little bit. So it doesn't concern me that cap rates are going down. You just, at some point, the investors have to be educated on it and quit saying, okay, I can still get this, where I used to at the 5-year turn. Now we may have to be 6. But keep in mind, what is that? That's just a projection. It doesn't mean, and I've told a lot of my investors this, because we say we're going to refinance in 2 to 3 years, and the exit strategy in 6, that's not written in stone. That's a business plan, but you've got to be fluid, and you've got to look at the market during the time you're doing this and see, is it the time to refinance? Maybe it's time to refinance in a year from now if the property is more stabilized. Maybe at that year 6, maybe that's not the time we want to sell. Maybe we want to do a refi again. So it's just a guideline, but you've got to, be in reality mode. And no one, like I said, I don't know what's going to be in 3 or 6 years, but we have a plan, and there's always the backup plan. If that's not it, we'll regroup and head on down the road.
It's almost like you knew what my next question was going to be. I wanted to know your thoughts on the next, year to, 6 months to a year, or just what you think is going to happen in the real estate market.
Well, I think you're going to still see cap rates compress a little bit more, and this is mainly to do because the Fed's pretty much telegraphed they're not raising rates over the next 2 years. I'll be shocked if they can't do it. They box themselves into a corner, and I don't want to go down the the rabbit hole of the financial markets. Other than, it's sort of like a big Ponzi scheme, really, when you look at it, because there's a lot of stuff out there in the financial world in the stocks that are way overvalued. It makes no common sense when you look at it. I mean, when you look at earnings and all that, it makes no sense of where this stuff's trading at. So now people love they love the get in there, but once they pull the punch bowl away, it's everybody going to take the exit at one little door, but you got 500 people to get out the door. Well, guess what? There's your crash as far as when it starts happening. You'll notice financial markets, when they go up at a nice little slope. If you were to pull a chart up here for say the S&P 500 or the Dow, it goes up at a nice little nice angle, call it 45 degrees. And so when the markets go down, though, they drop like an elevator shaft. And you can see that anywhere on a chart if you just look at it. And you got to go think about, okay, what causes this to happen? What makes markets go up? Well, demand makes markets go up. But what's the driving factor behind it? Well, it's greed. I mean, it's the greed factor. Why we all make more money. So that's what's driving it up. Now, when the markets come down, what makes the markets come down? And because they come down, if you look at a chart, they come down 2 to 3 times as fast as they went up. Well, what is driving that? It's another emotion. It's not greed, but it's fear. Because everybody's saying, oh my gosh, it's going away. And so everybody's trying to sell everything and it just drops like a rock. Well, if you look at those two emotions, greed and fear, which one is a stronger emotion? Well, it's fear, because it's the fight or flight mode in the human. So that's what drives it down 2 or 3 times as fast as it goes up. And you can see this anywhere on any chart, and that will happen, at some point. But sort of back to your original question. Sorry, I go down these trails when I start talking.
It's good information.
Financial markets. Like I said, I don't see the Fed doing anything in the next 2 or 3 years as far as the market's going down. They're going to have to keep printing more and more money. If you really want to know something else, I feel, and this is something I've been dealing with for a long time, the Fed can print all they want to, but at some point in time, people will lose faith in the dollar, and it's the reserve currency of the world, because that it is what it is. But it doesn't mean it always will be, because they're going to have to, some point or later, they're going to have to figure out how can they stop, say, a run on a bank when the market starts crashing and people are getting nervous. Well, there's a really good way to do that. You just eliminate the fiat currency, the paper currency. And if you go to something like, I'm sure everybody's heard of the Bitcoin, right? So go to a digital currency, and government's already floating it out there. My personal opinion, I'm not a tinfoil hat guy, but everybody knows Bitcoin. When was it created? Who did it? Blah, blah, blah. Well, I wouldn't be surprised if it wasn't a trial balloon floated by a government to see how the public would accept a digital currency. The thing about a digital currency, it's not physical. You can't hold on to it. It's all online. It is what it is. It's smoke and mirrors. Well, if the market starts to crash, they can create whatever they want to keep propping it up. And if people get nervous and they want to pull all their money out of a bank, well, guess what? You can't pull all the digital currency out of anything and stuff it under your mattress. It's not possible. So that concerns me a little bit, as far as what the market's like. I mean, if you think banks still carry a lot of cash, go down there and try to withdraw, say, $100,000, and because you're a little concerned, you want to keep some cash around. I've done it, and go experience it for yourself. And you would think that that you're trying to do a personal run on the bank. They don't keep that kind of cash down there, number one. So and by the way, guys, if you don't think you're already doing it and say, oh, I'll never fall for the digital currency. Yes, you are. It's the same thing. You got the debit card. A lot of it's already digital. It's online. So it's coming. So I would say just prepare yourself for it. And that's back to what I said originally: hard assets, real estate. best investment I can find right
Great
now.
advice. No, I'm glad that you brought that up. It's something I know I've thought about a lot recently, or you can see some things happening. It's something we've been conditioned for a long time as well. So what about preparing for that downturn? Any other ways other than this electronic currency? What about just on the real estate, on your multifamily properties? How are you preparing for that potential downturn or downturn that you mentioned, like it's going to happen eventually?
Right. Well, we try to, when we're looking at properties, it's back to the same thing. You've still got to buy value in the down. And when I say downturn, it's going to be more in the financial market. Now, the real estate market may take a little bit of a hit, but if you go back and look at the last market crash, Class C properties did better, pretty much from a value standpoint than Class A's, and some of the B properties. So maybe that's when you hold. That's when you hold the property and you don't really necessarily want to sell it, but you position yourself for some decent cash flow during that time, and maybe you hold through it a little bit. So,
Tracy, just amazing information. Unfortunately, we're going to pivot to a few final questions. But do you have a few daily habits that you're disciplined about that have helped you achieve success?
Yeah, I do something that's called vision mapping, and it sounds a little crazy maybe, but it's something that you write out on a daily basis. And everybody talks about goal. Here we are coming to the end of the year. Everybody's gonna say, I'm going to make my goals for 2021, and they write them all down and they put them on a piece of paper, and sooner or later they get shoved into a drawer somewhere and nothing really happens. So what you got to do is figure out, okay, you have your big plan, and from there you start diving down a little bit closer. I'll give you an example of, say, a guy in high school or a girl in high school are coming out and say, well, what do you want to be, when you go out into the world and become an adult? Well, they said, well, I want to be an attorney. I said, okay, so that's a great goal. Let's talk about what do you want to do to be an attorney? What are you going to do? He goes, well, I'm going to go to law school. Okay, that makes sense. And before that, what are you going to do? Well, I'll go to get my bachelor's, and from there I'll apply. And then I said, what are you going to do that? Well, I guess I got to, make good grades in high school. Okay, what does that mean? And you keep digging down to what you come to is, what are you going to do today? Today, what are you going to do to get to that big goal? If you take care of the daily thing you're going to take care of, guess what? The rest of it will start falling into place. But you have to have something that's attainable on a daily basis. And if that means I got to get up every morning and I've got to go jog or walk or whatever you're going to do to help you set yourself for that day, you got to knock it out. And I'll write down something on, what am I doing today? Maybe it's underwriting a property. Hey, you want to be a real estate syndicator, millionaire. Well, that sounds great. What are you going to do today to get there? Maybe it's because I need to call X number of brokers, and I need to set those meetings and get face to face with them so that they'll know who I am to come give me those pocket listings. So it all comes down to a daily thing. What are you going to do? And I would encourage you to, and it's called vision mapping, because guess what? If you write it down and you read it, and I'm talking about seriously writing it down. When you write it down, it's powerful, and it starts focusing on that daily goal so you can get that ultimate goal, the long-term goal.
Love that. Consistency, right? All the small steps, consistent small steps lead to big leaps. But I feel like most people never write it down. They think they have a goal in mind, or but they don't write it down. Writing it down does something to you mentally, right? Or helps you to commit as well, as long as you don't just throw it in the drawer like you talked about.
Right.
But Tracy, what's your best source for meeting new investors right now?
Well, my daughter, Keely. So, it's just sort of funny. I've had several companies, I've had partners, but I'll tell you the best partner you ever have, for me anyway, is my family and my kids. From that standpoint, everybody's been burned at some point in time, either through a business deal or whatever. And that can happen. So, but I, trust my family and my kids, and I call them kids, they're all adults now. But I trust them with anything, and my daughter feels the same way. She's been through a couple, business deals that didn't turn out very good, and we sort of looked at each other and goes, I always do business with my family, my dad or my daughter or whatever. And so, the best way to do it is to raise up your partners. So now I would not have said, okay, Keely is my second. I've got 4 kids. I've got 3 daughters and a son. And I was looking at each one of them. They all have their own personalities, but Keely is my entrepreneur of the group, and she's a great partner to have, and she's got skill sets that just I don't have, basically, and so that she helps really along the line when we talk about the money raise or whatever for a deal and going and getting investors. She's really, really great at that, so that helps me a lot. And I try to stay in my own little lane when I do that. Man's got to know his limitations. I think Clint Eastwood said that somewhere. So that's what I do. I don't try to get into her, area of expertise, and she doesn't get into mine, and it makes a great partnership. So
nice. Yeah. Raise up your business partners.
Yes. That's the best way to do it, but you better start soon. So
what's the number one thing that's contributed to your success?
Tenacity, and I would say reinventing myself. I'm a former Marine, and they taught us you just don't quit. There is no quit in us. And I've been down before, guys. I'm telling you, I always, I had a bankruptcy in '98, so there I am at 42 years old with 4 young children. I guess I better figure out what I'm going to do now. And so I reinvent myself. I'm not afraid of trying something new, whether it's trading the markets. I just try to reinvent myself and don't get so locked down that you just get, you can't come out of it, and have some people around you to help bring you up. I mean, I've got a great family that my wife has been behind me the whole way, and she helps support me in areas, sometimes financially and also mainly emotionally, to keep you, because it's tough if you don't have somebody there to help boost you up, because hey, life can throw some things at you. But I would say reinventing myself into something else, that's what I've done throughout my whole life.
And how do you like to give back?
Well, I find charitable organizations that I really believe in, and we try to support them best way we can financially, or maybe through volunteer work or something like that. And I think one of the best ways to give back, and I've met several young people, some of them are still in college wanting to get into real estate, and they find me through maybe a podcast show like yourself or someone else, and they've reached out to me before, and I don't know them, but I'll always give my time to them and sit down and buy them lunch, and help them, because they want to know, where do I start, how do I get there? And I said, call me anytime, I'll be glad to help you. It's something that I didn't necessarily have when I was real young. I didn't have, because one thing, the internet's changed so much from when I first started. So that is out there to be able to have a source as a mentor. I think mentorship is huge. I've always, no matter what business I'm in, I've always had a mentor involved in it, because, hey, I don't know everything about every industry out there, but hey, I can find someone who does, and then go and say, hey, would you help me along this to be a mentor for me? So that's, I think that's very important in giving back in that area.
No doubt. Well, Tracy, I'm grateful to have met you and to have Keely on the show as well. And I just appreciate you just really laying it out there in simple terms where we can all kind of understand today, just the relationship between the financial markets and interest rates, cap rates, what that does to the prices of our real estate and things like that, and helping us to just get a basic understanding there so we can start to have a better understanding, to know what to expect and what to watch. But so grateful to have met you. How can the listeners get in touch with you and learn more about you?
My email address is tracy@hubbardcapitalgroup.com. And my phone number, I'll give that out too. It's 817-291-5766. That's the only phone I have, and I do answer it.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.